A very, very good morning to everybody on Wednesday, 1/11/23, January 11th, 2023. It's Wednesday. We have nothing on the books today. There's only crude oil inventories. Some of these Fed speakers are popping up out of nowhere without being on the schedule, so obviously can't predict that. Yesterday, Jerome Powell, nothing to say whatsoever, just spoke about the climate. And what did we do? The SPX closed not only at 39.19, above 3,900 for the first time since December 15th, but it actually closed green. A green close has been a devil's poison pill. We have not, I will repeat again, this is data. It's only data. My opinion is like my asshole. I got one. You got one. I don't have an opinion. There's no emotions involved in the market. Green is bad. We had two green closes, December 21 and 20. We had two green closes, December 13 and 12. We had two green closes back on November 23 and 22 prior to Thanksgiving. We had two green closes the day of CPI back on November 10th, up 207 points, and the day after that. We had three green closes after we came off of that big November low when we were oversold. Back to back green closes don't happen very often. Even worse is when they do happen, they don't seem to follow through very nicely with a third one. So, once again, not at all angry, not at all upset, nothing whatsoever. The credits, the SPX credit spreads are paying. They're paying. I was very happy for Randon, new member, on Monday. He went ahead and took the Tuesday 39.40, 39.35 spread at $3.
Just seeing a piece here
As we
saying
closed
that,
at 39.19,
according to two reports,
expired
falling natural gas
full
prices
credit
may shave
150%.
13 billion
There
pounds.
were other ones,
or
39.45, 39.50s,
$13.8
a little bit
of
less
the
credit.
UK's
This was the best
Treasury
one that you could
spending
have taken.
before
That was the
consumers
best
with
one that
high
paid
energy
off.
bills.
As I threw out there in the weekend, and as I threw out there again on Monday, where my prediction is that we would go up on Monday to 39.45, we would come down on Tuesday to around that 38.55, and then we would get a CPI that would explode us to the upside, with the 100-day moving average being right here at this 39.96. And I want you to see this trend line that's right up here, right around 40.50. Okay? Well, this is where that trend line is from a big, wider point of view. This is that falling trend line coming down here, which has been tagging every one of our highs. And as you remember, when we went over here into that December high and that November high, we had broken up above the 200-day moving average. We went right up and made contact with that trend line, and then we absolutely puked off of that. We had 4 red weeks in a row. Last week we were green. Here are those spots that I was looking at. Now, yesterday, zooming this out in a smaller time frame, all we got was the move down to 38.37 or 38.77, missing that little 20-point move, had that move up here to the top. Now, where I was looking for as we gone into the weekend or started the week is the next move from CPI is going to be coming up here, up to 4,000s. I am bullish. I've been bullish since October. I'm bullish. I will show you where we're bullish, and I apologize if it is taking up too much time of your morning, but I want it to be very clear. I am bullish, looking way up here, 43.50, 43.80, 4,500. That's where I'm pointing to. But right now, no way Am I going to get into calls? Like I was saying yesterday, I would love to get into calls. Yeah, I would absolutely love to get into calls. Having sold my calls on Monday when we had that pop. With the VIX down here below 2102, absolutely not. There is no way I am getting into calls with the VIX down here below this 2102. Visits below 2102 have been a death trap for bulls. It's been an ongoing procedure. Here was your August highs, and you saw what happened after the August highs. Here, over here, this was your November pop. Here's your December pop. I'm not doing it. I'm not saying that it can't be done. I am not doing it. I am not going to go out there and risk my money into calls, although they may be cheaper because it's such a low VIX. I am not doing it. No way, no how. I'm waiting for my dip. I want my dip. And when I get my dip, I will go ahead and expose myself exactly like I want to. The dollar, same thing. Down here under this 103.40. This is the end of the world for the dollar, meaning you break down here and the SPX immediately goes to 4,200. That's the kind of pivot this is. I am not buying it. Not down here. No way. No how. With that VIX down there at 21, and we just closed green, and we haven't done anything to expose ourselves. Now, again, I am looking for us to be up there in that 4,000 area, but again, come on down and come here to the 10-year. The 10-year trolling on this 34.37 as if it wants to go down there and break down this trend line, which has been going on for more than a year, and start filling these gaps down to 28 because, once again, like I showed in the chat room and I was chatting with Spicy earlier, I do not see them raising rates on the February 1 meeting. No rate hike. No rate hike whatsoever. We get a great CPI report tomorrow. They don't raise rates on February 1. And then we have on CPI again on Valentine's Day. And that is how we get up into above this resistance line over here, right around 4,100, 4,200, above 4,155, and push on into that 4,325, 4,500 area. It happens in February in my book. One of the other things that you could look at when you see that as well, let me put you back on the video and we'll throw up the moving averages. You can see here your 50-day moving average is climbing up. You can see here your 200-day moving average is climbing down. In about 3 weeks, these two are due to cross, possibly even in 2 weeks. But because of where we are and the scenario that we're in right now, I can't. I already bought down here. I sold up here. I can't get long. Me personally, I can't do it only because I have so many technical alarms that are here that are about to go off, and they're all telling me the same thing. Don't do it. Don't do it. Don't do it. I'll bring you over one of my wider screens just so that I can get in without zooming out. And here on the SPX, this is the 4-hour. And this 4-hour RSI nearly got overbought and is just trolling here around this 67 area. So again, for me, this tells me, yeah, sure, you could go ahead and get yourself some calls for CPI tomorrow. NDX, exact same thing. Almost got overbought on Monday. Just trolling here in the 70 area. I want to buy when it's down here, down at 20, down at 15, because then I know I'm getting a strong, powerful move to the upside. But because of where this is and the way that it's exposed, no, I can't do it. There's no way. There is no way that I could go out there and say with confidence, meaning that I'd be placing a large position, that I can get into calls. Because we have here, again, that green close over here on Tuesday or yesterday. We did close above 3,900. First time since way back here in December 14th when we fell out of it. We've got the VIX below 2102. We've got the 10-year up there. We're trolling in a very resistance area over on the Nasdaq. I can't. Give me a dip and I'll go get long. But as of right here, I can't do it. If we close green today, towards the end of the day, we're closing green. I will be getting into some puts for CPI because the data is all saying the same thing. If it goes against me and we go up, fantastic. I'm not going to risk a lot of money. But green, it's just that's the way that it is. So, again, fantastic. We closed above 3,900. I don't trust it. I'll see you guys in the chat room.